There's a seductive myth whispered across every trading floor that somewhere out there exists a strategy that never loses. Wall Street feeds on this illusion, selling the idea that perfection in the market can be achieved through formulas, indicators, or secret institutional knowledge. But the truth is far simpler and far more powerful. The only strategies that never lose are the ones rooted in mastery over yourself. You see, the market doesn't test your system, it tests you. Every fluctuation in price, every spike, every dip is a mirror reflecting your beliefs, your fears, and your willingness to stay aligned with your plan. The illusion of control over the market is what makes most traders lose. The discipline to control yourself in uncertainty, that's what makes a trader never lose. A trader on Wall Street doesn't survive by being right. He survives by being prepared. He doesn't chase trades. He executes opportunities that match his rules. He doesn't fight volatility. He dances with it because in the chaos of liquidity, his focus remains unshaken. Not on what the market will do, but on what he will do when it moves. Never losing is not a claim about outcomes. It's a commitment to principles. It means that no single trade has the power to define your worth, your confidence, or your identity. You've already won the moment you decide to act with consistency rather than impulse. You've already secured your position the moment you trade from clarity instead of fear. Wall Street doesn't reward those who avoid risk. It rewards those who understand it. Every legendary trader, every institutional mind that outlasted the storm learned one eternal lesson. Control is an illusion outside yourself. The only thing you can ever master is your response, your emotion, your patience, your process. And that's why the 6 strategies that never lose are not technical setups. They're psychological frameworks. They begin with acceptance that the market owes you nothing. They evolve through detachment, that no single outcome defines your future. They sustain through consistency, that repetition builds trust in uncertainty. They strengthen through resilience, that every setback is a rehearsal for success. They sharpen through observation, that clarity comes when emotion fades, and they culminate in neutrality, where winning and losing mean nothing but trading well means everything. When you apply these principles, you stop fighting for control and start aligning with probability. You no longer react, you respond. You no longer chase, you attract. And in that shift, something extraordinary happens. Losses stop being painful because they no longer define you. You've built a framework that never loses because it's not built on prediction. It's built on presence. Wall Street doesn't destroy the disciplined, it destroys the distracted. The traders who survive aren't the smartest. They're the most emotionally consistent. They understand that the market is a game of patience disguised as motion, and that true wealth comes not from constant action but from controlled execution. So when you hear 6 trading strategies that never lose, remember this. It's not about never losing a trade. It's about never losing your focus, never losing your faith in your process, and never losing your emotional balance in a world designed to unbalance you. When you master that, you no longer trade against the market. You trade with it. You no longer fear its unpredictability. You respect its rhythm. And in that harmony, every decision becomes a reflection of your inner equilibrium. That's when you stop trying to conquer the market and start mastering yourself. There's a reason most traders never make it past the learning curve, not because they lack strategy, intelligence, or opportunity, but because they misunderstand what winning truly means in the market. They think success is measured by how many trades they win, how often they predict ions are correct, or how perfectly they can time entries and exits. But the truth is far more counterintuitive. Real winning comes from learning how to lose and losing. Well, most people enter trading with an expectation of control. They believe that with enough knowledge, research, or experience, they can eliminate loss. But the market doesn't care about your expectations. It responds only to behavior. It's not your analysis that determines your survival. It's your ability to emotionally manage uncertainty, to remain functional and focused when the outcome doesn't go your way. The market tests the quality of your mindset long before it tests the accuracy of your methods. Losing is not the opposite of winning. It's the foundation of it. Every losing trade is data. Every mistake is feedback. Every loss that doesn't break your discipline strengthens your psychological resilience. The trader who loses well doesn't resist pain. He understands that pain is part of the tuition the market charges for mastery. Losing well means You take the hit without letting it take your identity. You accept the lesson without rewriting your worth. You move forward without dragging your emotional past into your next decision. When you avoid losses, you avoid truth. You create illusions of perfection that crumble under real pressure. You overtrade to make back what you lost. You move stops to give the market room. You justify risk beyond your plan because you can't emotionally process being wrong. That's how traders destroy themselves. Not because of one bad trade, but because of the refusal to feel what losing actually teaches. The fear of loss becomes the architect of their downfall. A trader who wins consistently has made peace with losing. He knows that each trade has a random distribution between win and loss. He doesn't expect certainty. He expects possibility. This mindset allows him to execute flawlessly because he's not trying to control what cannot be controlled. The moment you stop needing to be right, you open the door to clarity, patience, and flow. You trade with what's in front of you, not with what you wish the market would show you. Think about this. The market doesn't punish losses, it punishes resistance to loss. When you accept that any trade can fail, you no longer freeze when it does. When you accept that losses are part of the statistical outcome, you no longer attach your ego to every tick. Your self-worth detaches from your performance. You no longer chase validation and price movement. You start to operate from neutrality, the most powerful emotional position a trader can hold. Winning comes from a relationship, with the market built on acceptance, not control. The best traders don't seek to eliminate discomfort. They embrace it as feedback that they are in the game, evolving, adapting, learning, losing. Well, it doesn't mean liking to lose. It means understanding that every loss, if handled correctly, contributes to a deeper sense of emotional mastery. You begin to internalize one of the greatest truths in trading. Growth doesn't happen in comfort. It happens in discomfort that you manage without reaction. The trader who learns to lose, well, becomes dangerous in the best way because nothing rattles him. He doesn't fear drawdowns, he plans for them. He doesn't freeze in volatility, he flows with it. He doesn't revenge trade because his emotional capital is worth more than any single trade. He understands that the real account balance that matters isn't just the one on his broker screen, it's the one inside his head. If your mental capital is drained, no amount of financial capital can save you. Avoiding loss keeps you in the realm of illusion. It keeps you attached to the fantasy that the market will move to validate you. But trading isn't a validation mechanism. It's a probability mechanism. Every trade carries risk, no matter how perfect the setup looks. And when you truly internalize that, you stop fighting against it. You stop trying to outsmart randomness. You start working with it. You learn to let go when you must, to accept the stop when it triggers. To see a red number as part of the bigger picture, not the end of your story. Every professional on Wall Street who has lasted through decades of cycles, bull, bear, inflation, collapse, will tell you the same thing. They lost more trades than they won, but they lost better. They knew how to take small losses fast and protect their capital. They understood that preservation comes before multiplication. They mastered the art of controlled surrender. They could detach from outcomes because they trusted their process. To lose well, you must first redefine what loss means to you. A losing trade is not failure. It's an event. It's data. It's a neutral piece of information that tells you something about your system, your timing, or your state of mind. It's not personal unless you make it personal. And if you can view it through that lens, you'll find an unexpected sense of freedom. You'll realize that the fear of losing was always worse than the loss itself. Losing well also means managing your expectations. You must expect imperfection, expect randomness, expect that sometimes the market will behave irrationally and that you will be wrong. Not because you're bad, but because that's the nature of uncertainty. When you align with that truth, you no longer waste emotional energy on resistance. You adapt, you adjust, you remain flexible. That flexibility is what allows you to survive the storms that wipe out rigid minds. The irony is that when you learn to lose well, your results start to improve dramatically. Your drawdowns shrink, your emotional swings flatten, your performance stabilizes. You stop giving back profits from revenge trades. You stop sabotaging yourself after a winning streak. Your consistency rises not because the market changed, but because you did. You are no longer trading from fear or ego. You are trading from awareness. The trader who fears loss will always trade defensively, reactively, impulsively, but the trader who accepts loss can trade with clarity and precision. He no longer over-leverages to chase validation, nor undertrades out of fear. He acts according to plan, and in that plan lies his peace. Losing well is about emotional calibration, finding the point where you can absorb impact without shattering. Think of a professional fighter. He doesn't avoid punches. He learns how to take them, recover quickly, and stay strategic. Trading is the same. You can't avoid the hits, but you can strengthen your ability to remain calm, to think clearly too. Execute without fear. There's a moment every trader reaches, a breaking point where frustration and doubt collide. That's the moment most quit. But those who push through that psychological wall discover something profound. When you stop needing to avoid pain, you become unstoppable. You no longer crumble when the market tests you. You no longer overreact when your plan fails. You accept that imperfection is the price of participation. And in that acceptance, you gain mastery. The mindset of winning by losing well is freedom. It frees you from perfectionism, from attachment, from emotional chaos. It allows you to experience trading as a process of constant refinement rather than a battle for constant validation. It turns every mistake into a teacher, every loss into a step forward, every setback into an invitation to grow deeper in self-awareness. You'll know you've reached that level when you can take a loss and feel nothing but curiosity. When your stop hits and you say, "Interesting, what did that reveal?" Instead of, "Why did this happen to me?" That shift is the birth of professional consciousness. You no longer see trading as a fight to win. You see it as a journey to understand the market doesn't require perfection. It requires presence. And the only way to stay present is to stop fearing outcomes. When you lose well, you stay present. You stay objective. You stay open to opportunity. You realize that success isn't about being right, it's about being available. To act when probability aligns in your favor. To win in trading, stop trying to avoid losing. Start learning how to lose. Like a winner. Lose small. Lose consciously. Lose with grace. Every great trader has bled through 1,000 small losses to earn the calmness that builds fortune. Every consistent performer has faced the same fear you feel and transformed it into trust. When you can lose without breaking, you've already won something far greater than money. You've won control over yourself. And that not a perfect record, not a flawless strategy is what truly never loses. The most dangerous belief a trader can hold is the idea that the market can be predicted. It's seductive. The notion that with enough charts, indicators, or data, one can forecast exactly where price will go next. Every beginner falls into that trap. They search endlessly for certainty in a place built on uncertainty. They mistake analysis for control, confidence for accuracy, and prediction for mastery. But the market doesn't reward prediction. It rewards mental precision. The ability to think clearly, act decisively, and remain emotionally balanced in the face of randomness. Prediction feeds the ego. Precision feeds discipline. And that difference defines who survives in this business. The ego seeks to be right. It wants validation, recognition, and the dopamine rush of saying, "I called that move." But precision seeks alignment. It doesn't care about being right. It cares about executing correctly. The trader who operates with mental precision focuses on what can be controlled: entry quality, position sizing, risk management, and emotional neutrality. The rest, the direction, the timing, the volatility, is left to the probabilities. The moment you stop trying to predict the market is the moment you begin to see it clearly. Because prediction clouds perception. When you believe you know what will happen next, you stop paying attention to what is happening now. You ignore the signals that contradict your bias. You twist information to confirm what you want to believe. You become blind not because the market hides the truth, but because your attachment to being right filters it out. Mental precision is the art of staying neutral while everyone else is emotional. It's the skill of observing without judging, reacting without attachment, and acting without hesitation. It requires a level of self-control that most never develop, because it demands you let go of your need for certainty. Precision lives where uncertainty is accepted, not resisted. It's the discipline of working with the unknown, not trying to eliminate it. You can't predict the next tick, but you can prepare for it. You can't forecast every candle, but you can design a response for every possible scenario. That's what mental precision means. Your mind is prepared to adapt, not attached to outcomes. You don't need to know what will happen. You just need to know how you'll respond when it does. Think about this. The greatest traders in history didn't build fortunes by predicting markets. They built them by mastering probabilities. They accepted randomness as the playing field and constructed systems that worked over time, not in any single trade. They didn't guess. They positioned. They didn't hope. They executed. They understood that the edge lies not in knowing what will happen, but in knowing what to do when it happens. Mental precision starts with awareness. Awareness of yourself, your tendencies, your emotional triggers. Because the mind that cannot observe itself cannot act precisely. Every hesitation, every impulsive entry, every panicked exit comes from a lack of awareness. You react not to the market, but to your internal noise. Precision quiets that noise. It brings clarity to decision M. Because you're no longer clouded by emotion. When you trade with precision, every decision is deliberate. You don't chase moves. You wait for alignment. You don't force trades to fit your narrative. You let the structure reveal itself. You're not trying to predict the next candle. You're reading context, risk, and reaction. The clarity that comes from this detachment allows you to see what others miss. While most traders are consumed with guessing, you're calmly responding. The problem with prediction is that it creates emotional investment. The moment you predict, you attach you want to be right, and that desire distorts your perception. You start managing your emotions instead of your trade. You move stops, ignore signs of reversal, or add to losing positions. Not because it's rational, but because your mind can't accept that reality didn't match your expectation. Mental precision eliminates that trap. It allows you to accept new information instantly without resistance. Precision is built through process. Every time you follow your plan, not your emotions, you strengthen mental precision. Every time you accept uncertainty without reacting impulsively, you build emotional muscle. The goal isn't to eliminate losing trades, it's to eliminate mental friction. A precise mind executes consistently because it's not tangled in judgment. It doesn't label outcomes as good or bad. It measures them as part of a long-term system. Imagine two traders watching the same chart. One is trying to predict where price will go next. The other is focused on managing what happens if price goes anywhere. One is emotionally dependent on being right. The other is strategically prepared to adapt. The difference in results between mental sharpness that allows you to execute edge after edge until probability delivers your reward. 2. Develop mental precision. You must train like an athlete of the mind. You must practice detachment, awareness, and patience daily. Every chart you read, every trade you take, every emotion you feel is part of that training. You're not just building skill, you're building control over yourself. You're teaching your brain that uncertainty is safe, that imperfection is natural, and that your worth isn't tied to being right. Prediction is fragile. It shatters when faced with unexpected reality. Precision is durable. It adapts. It bends without breaking. The precise trader doesn't collapse under volatility. He thrives in it. He doesn't demand certainty from the market. He brings certainty within himself. His confidence isn't in what the market will do, but in how he will respond. And that's the ultimate edge. Not a setup, not an indicator, not a secret algorithm. The edge is your mind, trained, calm, and precise. The edge is your ability to execute without interference, to remain balanced in the face of chaos. The edge is mental clarity that cuts through noise like a scalpel. The next time you feel the urge to predict, pause, breathe, ask yourself, am I trying to be right or am I trying to trade well? That single question can shift your entire trajectory as a trader, because trading well is not about knowing, it's about responding. It's about staying present, following your edge, and accepting that uncertainty is the cost of freedom. Mental precision transforms trading from gambling into performance. It turns fear into focus, chaos into rhythm, randomness into opportunity. The trader who cultivates it doesn't need to know what will happen next, because he knows exactly what he will do no matter what happens next. And that is why the market rewards mental precision, not prediction. Because prediction is temporary confidence built on illusion, but precision is permanent strength, built on mastery of self. The market respects that. It rewards that. It always has. Every trader comes into the market looking outward. They search for patterns, for indicators, for signals, and setups that will give them an edge over everyone else. They chase knowledge, data, and tools, believing that the secret lies somewhere out there in the next strategy, the next mentor, the next breakthrough analysis. But the truth, the kind of truth that doesn't just improve trading but transforms it, is this: the game is not outside. You control the inside and the outside follows. The market is a mirror, not a machine. It reflects your beliefs, your fears, your discipline, and your emotional state with ruthless precision. Every hesitation you feel, every time you break your rules, every moment you let fear or greed guide your hand, the market reflects that back to you in the form of results. It's not punishing you, it's showing you exactly who you are. And until you master what's going on inside your mind, no system, no strategy, and no mentor can save you from yourself. What separates consistent traders from chaotic ones isn't knowledge, it's internal control. Everyone can read a chart, everyone can learn technical patterns or study institutional behavior, but few can maintain composure under pressure. Few can stay calm after a loss or humble after a win. Few can act on their plan when their emotions are screaming for escape or revenge. That's why the market rewards internal mastery more than external skill. To control the inside means to accept full responsibility for your behavior. No excuses, no blame. The losing trader blames the market, the broker, the volatility, the news. The winning trader looks inward. He knows that whatever happens externally is only the result of how he managed himself internally. If he broke a rule, that's not the market's fault. If he hesitated and missed a move, that's not manipulation. It's high. His results are his reflection, and because of that, he's in control. Control doesn't mean suppressing emotion, it means managing emotion. It means recognizing that fear, greed, frustration, and excitement are natural human responses, but they cannot dictate your behavior. You can't eliminate emotion from trading, nor should you. Emotions carry information. They tell you when your mind is out of balance, when you're attached to outcomes, when you're trying to force control over what can't be controlled. The key is awareness. When you can see your emotion without becoming it, you've already won half the battle. Every great trader eventually learns that the most important chart is not on their screen, it's in their mind. Your thoughts are your indicators. Your beliefs about risk, reward, loss, and uncertainty shape how you perceive every price movement. Two traders can see the same candle. One sees opportunity, the other sees danger. The difference isn't the chart, the difference is inside them. Control the inside and the chart becomes clear. Your trading performance is a mirror of your emotional patterns. Impulsive entries come from impatience. Early exits come from fear. Oversized positions come from greed or desperation. Overtrading comes from the need to prove something. Every external behavior has an internal root. If you only treat the symptoms, changing strategies, switching time frames, chasing new tools, you'll keep repeating the same mistakes in different forms. The problem isn't your system, it's your state of mind. To control the inside, you must first become radically self-honest. That's uncomfortable because it means admitting that you, not the market, are responsible for your outcomes. It means acknowledging that your losses are not bad luck, but feedback. It means facing the reality that the enemy isn't the volatility, the algorithms, or the liquidity traps. It's your own lack of internal alignment. That's not an accusation, it's liberation. Because once you accept full responsibility, you gain full power. The mind you bring to the market determines the results you get from it. If you approach trading with fear, you'll find confirmation of fear. If you approach it with greed, you'll attract situations. You no longer chase. You wait. You allow. You execute when your plan aligns and you walk away when it doesn't. You stop trading for the thrill and start trading for the process. The more peace you find inside, the less you need from the market. And ironically, that's when the market starts to reward you. Every trader eventually faces a moment where they realize that no amount of technical skill can protect them from themselves. You can have the best setup, the most accurate analysis, the perfect entry, and still lose if you panic, hesitate, or deviate from your plan. The external doesn't fail you, the internal does. Mastering trading means mastering your reactions, not the market's movements. Control the inside, and the outside begins to organize around you. Your trading becomes calmer, more deliberate. You stop forcing trades because you no longer need the market to give you something emotionally. You already feel whole. You no longer trade to fill a void, you trade to express mastery. That shift changes everything. The results that once felt random begin to stabilize. Consistency emerges naturally because your internal state has become consistent. Think of your mind like a lens. When it's clouded with emotion, every chart looks distorted. When it's clear, you see patterns effortlessly. The more you control the inside, the cleaner the lens becomes. That's when you start to feel flow, that effortless rhythm where you are fully engaged, neither forcing nor resisting, just responding. That state of flow isn't created by the market. It's created by your alignment with it. When you control the inside, time slows down. You notice subtle details others overlook. You sense rhythm and tempo. You execute not from calculation but from calm readiness. The market doesn't intimidate you anymore because you've neutralized the one thing that used to, your mind. Control the inside and detachment follows. You stop needing to win every trade. You stop fearing losses. You stop defining yourself by results. That's the paradox. When you care less about outcomes, your outcomes improve because now your actions come from alignment, not anxiety. You no longer trade to feel successful. You trade because you already feel grounded. You can't control the market. You can't control news, volatility, or institutions. But you can control your preparation, your mindset, your reaction. That's outside loses its power. You stop chasing, you stop fearing, and you start flowing with the rhythm of probability. Control the inside and the outside becomes a reflection of that order. That's when trading stops being a battle and becomes a conversation, not between you and the market, but between you and your own evolution.